start by thanking IGPC for this opportunity. It's a very interesting and a very relevant topic, as topical as it can get, in the context of the ongoing mutual evaluation that's being carried out in the context of Financial Action Task Force of India. And the panel is very interesting for three reasons. One, we consciously want to stay away from law, the technicalities and the compliance aspects, and look at the real world, how things have been happening and how things have been unfolding. So we are trying to bring about an intersection. We have Mr. Chappan from UAE, which has recently been subject to mutual evaluation in the last 24 months, where they have a body of work in the context of the transition, that the distance that they've traveled, which is the real interesting aspect we'll be looking into. Then we'll be following it up with Mr. Singh, who's got more than a decade of experience working with FATF and also AML CFT in the Indian context for the government of India. And we have veteran chartered accountant, Mr. Vaidya, who's worked extensively with the industry and who will be bringing in a lot of requirements in terms of the concerns of the industry, the concerns of the regulators, and how do we bridge the two as we move forward in 2024. If I may just start with Mr. Chappan on the fundamental question. What is it that you think India has to learn from the UAE experience? As simple as that.
Thank you, Arjun. Thank you, IGPC, for giving me this opportunity. I'm very well aware of the time constraint, so I'll try to keep it as simple and short as possible. But I'll try to cover as much as I can at the same time. So I'll divide my answer into two sections. One is like the story, and the other one is a bit technical aspect. So the story is DNFPB, the non-banking financial aspect of business, have never been regulated in UAE in the past. So when I say it was not regulated, I would like to give you a true picture. In 2020, there was no department. So everything was based on the central bank's AML control and regulations. There was no dedicated department or section to look into the DNFPB sector as such. So why DNFPB is important is because they are also gatekeepers. So the financial sector, from the banking perspective, the FIs, financial institutions, take care of the financial part of the business, but the non-banking sectors, which includes in UAE's case, which includes the dealers in precious metals and stones, the accountants and auditors, the real estate companies, and the company service providers. And there is a fifth leg, which is not under the organization I work for, which is Ministry of Economy, which is the lawyers and advocates. So they are regulated by Ministry of Law. So there is a separate entity which is the regulator for them. So there was nothing in place for all these DNFPB sectors. So in 2021, the first employee was employed. Now we have a team strength of more than 60 people working just on these four sectors. And I particularly work on the DPMS sector. So this has been the journey, and I'm kind of very proud to say that UAE have learned things in the difficult way, but we have addressed things very fast. So whatever shortcomings were identified, we tried to rectify, and that will bring me to the second part. Everything to do with the FATF assessment or the FATF kind of assessment, which includes the OECD, Sudesh, and the members were discussing about the OECD supply chain due diligence. So all this are a risk-based approach. So first thing is understanding the risk. So whether it be at the country level or be at the organization level or at the industry level, the first thing is how do you understand the risk? So as it is a risk-based approach, it takes time. So I'm from the industry. I came from I was a practitioner. I'm not someone who just came and started implementing regulation. Not like that. I learned it from the industry and came in. So in UAE, when I was running compliance for an organization, there was zero understanding. So sometimes on a funny way, sometimes people come and ask, but because I interact with the industry on a regular basis, so they know me very well. So if they have something, they come to me. So they tell me, but what is this? This is very very onerous on a company. So I feel, I never say this, but I feel in my mind, yeah, you remember the day I came to you asking for some documents? So that was the situation in 2010-11 when I started. Yeah, people, when you give a KYC form, people were asking, what the hell? Who are you? Why I should give my information to you? So from that, we have transformed as an economy. UAE have transformed a lot. Now everyone have started exchanging KYC. People have started understanding what is risk assessment. Everyone is having a policy in place. Everyone is doing a risk assessment of their own, and they are doing client risk assessment. They are doing customer due diligence. So things have changed. It was a 180-degree change in last 2 years. And I was talking to Kinjal today morning. So I was telling him, he was like, the security concern and things. We were talking about the diamond business. But I told him, when you come to UAE, I know most of you have. So there is a building called Almas Tower, which Sudesh used to sit. He have moved his office now. So it is one of the most secured building in UAE, and you cannot feel it when you come there. Yeah, just the security collect your ID and you get in. There is no armed guards, there is no police, there is nothing. But I can assure you, you cannot move by doing something inside that building. So that is how secure. So in UAE, mostly things are like that. From an outsider perspective, from outside you might not feel, but things are in place. So that is what, yeah. And when it comes to AML CFT concerns, especially in the DNFPP or DPMS space, it has been a 180-degree change in last 18 months. And yeah, not everyone is happy. People might have got fined. Yeah, but we cannot do everything in a very light-hearted manner. So yeah, that's the story from UAE.
Sir, from UAE, if I may move forward to India, which is experiencing a mutual evaluation expected anytime. The question to the Indian expert who's been handling this for so long, I'm going to look at it from a triangular perspective, where we don't have policy on one side, we don't have the idea of facilitation on the other side, and to top up with it, the scary aspect of enforcement. So, as India is moving forward for mutual evaluation, sir, how do you think the regulator will have to balance with policy and facilitation? And more importantly, what do you think of the overall progress we've made on mutual evaluation?
Good afternoon, everyone. First of all, let me express my sincere thanks for the organizers for this program. And I'm very much delighted that you have given me opportunity to share my thoughts on this topic. And I'm also very happy that we have very expert panelist, Mr. Abid, who has already touched upon this topic is though is too complicated and technical, but in very simplification, he has conveyed his idea. So before actually I touch upon the very question which Arjun has framed to me, I would like to give you some background so that actually I can send across the message which I want to convey to you. The first point here is that we are living in the global environment, and the global policies are impacting not only the India and the global environment. 2005, I was first posted in Enforcement Directorate as the Joint Director at that time. And then all of a sudden, I got the information from our ministry that a team from APG, Asia Pacific Group, is visiting India. And that team had the number of experts on the law, financial side, and a regulator side, they will like to review our PMLA, who was actually not enforced at that time. Means the law was passed in 2002, but it was not enforced at that time. Government was waiting for some notification to be issued for this. So we had the opportunity to interact at that time. The Secretary General of Asia Pacific Group, which was based in Sydney, Mr. Rick McDonald, and he later on became the secretary in the FATF. So from that started my journey, and then I had a lot of interaction at the global level with IMF, World Bank, and the experts from the US. I got the opportunity to go to the US also to see how their AML and CFT program is being run. This was a 15 days program. So this gave me the very foundation really to understand okay, what this is all about and how to take this all initiative into the right perspective. So I want to take you to the two things. One is that you have the UN platform where the global policy is framed through conventions, and another is the FATF. So FATF is much more, you can say, in details, but you can say on the legal framework, it is mostly given by our UN conventions. There were three conventions. One of the Palermo, which was on transnational organized crime. First was the Vienna, which was on narcotic related money laundering. And third was about Merida, that is corruption related. So the global, actually the focus is that the threats, which are the money laundering or terrorism financing, they not only impact the country, they impact the global economy. So unless there is a concerted efforts at the global level, no single country actually fight these type of crimes and the threats which are there to the economy. So with this background, this FATF took this agenda to take forward the UN conventions, and they further details. The number of countries joined in the journey. First, there were only G7 countries, and then more and more countries joined. So the 185 countries are actually implementing the FATF standards. It is very interesting to note that this is the fourth round of mutual evaluation which is going on at the FATF level. India only joined at the third round. Means India got assessed in 2010 and became member at that time. That was third round was already going on. So you can see we are already lagging behind in implementation of the effective standards from last. We are lagging behind by 20 years. So our models which are there of implementation, they don't have the maturity one. Now the fourth round is over and fifth round preparations are going on. So now India is being assessed on the fourth round process. In the fourth round, the key change which came was on the effectiveness standards. Earlier it was only technical compliance. So technical compliance means that you have a law. Basically, there were 40 recommendations that you have a law, you have an institutional framework, you implement that, and then that's okay. But in fourth round, they said, okay, everything moves around the understanding of the risk. Now, what is the risk? Money laundering and terrorism financing risk is there. Like you have the global environment where the terrorists are located, they are moving, raising funds, using funds, etc., etc. And similarly, the money laundering risk, they relates to the proceed of crime. So FATF has actually identified 20 categories of the crimes which their proceeds, they should not be laundered. So they have devised two way approach. One is the preventive model, another is the effectiveness model. The preventive model requires that the partners who are there in the chain, like banking sector, legal, like today dealers of the gold in the DNFBB category, they are supposed to be watchful of the illicit activities, and they are supposed to report to the financial intelligence unit, and that intelligence unit alerts the law enforcement agencies, and the chain reaction starts for taking an action. This is the concept. So amongst the latest, the fourth round, amongst the 40 recommendations, there are a number of recommendations which are related to the gold sector also. And the preventive model is already there in the fourth round for the gold dealers. Now coming to the point here, to what extent actually we have implemented the technical compliance, and to what extent we have achieved the effective standards which the FATF are there in India's context for the to meet the evaluation standard of the FATF. I will reserve my actually comments on this because the India's assessment report is being now discussed and being finalized in the Feb plenary, which is going to take place soon, and I think by June it will be out. So we all will have the access at that time to know what is all about the compliance level in India's context, and how it going to impact us, likely the gold industry. It will impact in number of ways. First will be if there is a gap shown in the compliance of preventive measures relating to the gold sector, so there will be policy push by the government at that time. You will have the more regulators, FIU, government policy. You will have more interaction on that, and it will be a, you can say, a time frame action which has to be shown. The second category is the effectiveness part. Effectiveness part has been given in the FATF standards. One is immediate outcome 3, that is for supervisors, and immediate outcome 4, that is for the implementers like the reporting entity, that's the gold dealers. And R1 is basically related to the understanding the risk. So ultimately, if you see whole around standard, it all talks about only risk and risk and risk. So if reporting entity does not have a proper understanding of the risk, then effectiveness also cannot be judged, and accordingly it will be remain under a monitoring mechanism for a long time. So in coming days, if I can actually visualize is that after the June, once they reported out, there will be impact assessment, and it will be seen to what sectors the more focus is required by the government side. There will be more interactions on that, and there will be more push really to know the actual what is the risk, what is ML and TF risk. If you ask me what is really understood by the global body as ML risk is, like, for example, gold smuggling. If there's a widespread gold smuggling, there's a huge risk for the country. It is a transnational risk as a domestic risk. If cases are, say, corruption cases are being detected by agencies, and if you find gold has been actually found as a disproportionate asset, it is a risk. Third is out of books actually transactions which are taken place. So you don't have a monitoring mechanism who is buying, who is not buying. You have the beneficial ownership requirements from the companies that if the person to whom you are transacting is really you have the sufficient details or not, like due diligence, enhanced due diligence. These are the technical terms, but ultimately it moves around the risk factor only. So better is that we start looking what FATF has already talked about, what they are expecting in terms of risk, and we also start planning for that so that we can have the internal policies which really caters to the risk. So for understanding the risk, 3 factors are very important. One is the opaquity of the beneficial ownership. If we have the say buyers, customers, or our partners where you have the you can say inadequate knowledge about the beneficial ownership, there's a huge risk in itself. And second is the character of the money. Which kind of a money is actually being dealt with. So if it is a proceeds of crime, or it is basically a third-party money laundering, or it is a self-laundering, or something like that. So these things has to be really absorbed, understood, and so that only then one can actually bring a effectiveness internal processes. Or as this regulator who is going to come in the future for the on-site and off-site inspections, ultimately they will come and will seek the remedial actions. So in coming years, I can perceive that there will be a lot of activity from the government side as well as from the industry side, because industry is considered to be a partner as well as also conduit for the risk. So this separate you have to think in that sense. And sooner it is done, better will be, because this will require a lot of actually time really to absorb these ideas. I was there in the this ED section. I was handling this policy part. I know we had struggled a lot to bring this amendments in the PMLA in order to bring the gold dealers under this category. We could bring the legislation also, but because of government side and not supporting from the industry side, so effectiveness could not be achieved. But I can tell you, it is you can delay the process, but you cannot avoid the process. So this is, we are living in this world. And now coming to the negative side of this body, FATF. FATF not only prescribe the standards, it assess the countries and also monitor the countries. I headed that committee for almost, you can say, 10 years. Asia Pacific Joint Group, which was monitoring the countries in Asia, which were identified by the FATF non-compliant countries. They are grey listed, and every 3 months the countries are supposed to give the reporting to that committee for the action plan, for the compliance of the action plan. So it's a huge work, I can tell you, and no country can actually get easily released, minimum 2 years and maximum 4 or 5 years. So if, for example, so this is the negative side of this body. It means if country voluntarily does it, very good. If they do not do voluntary, they will use other means to get the work done. So this is the broad points which I want to share with you. And coming to the key point which is there for today is that since this work is going to come, so better will be that you have the own in-house actually group which start looking for what are our the real actions which are looking for, what are the resources, which are the persons who can actually help you in identifying, and then as a policy initiative you can start doing it. It's not difficult, I can tell you. It is not difficult at all. It is only a initiative. It requires a frame of mind that okay, this work is going to come, we have to do it. So these are my own observations about this issue. Thank you.
Thank you so much for the insight, especially now that we've spoken about risk, we've spoken about reporting entities and the way forward for India. I'd like to bring in Mr. Vaidya to discuss two important aspects. First, what are the predominant concerns of the industry? And I want to narrow it down to the reporting entities. And how do you think post mutual evaluation, these concerns starting, let's say, June or July, will play out in terms of the reporting entities vis-a-vis the regulators in India?
I'll first thank the organizers to invite me, and thank you for keeping me last. It makes me very, very easy to say. What are the concerns of the industry? I think it is very well said in all the sessions from the first session today. There is to be a compliance. Now the only concern will be how will you train yourself for it and educate yourself. I would like to say some part where this industry was. That earlier we used to have a person saying, बेटा मैं आपका मुंह नहीं देखता, आपका जो पैसा नीचे पड़ा है वो देखता हूँ, बाद में हम आपको माल देते हैं. That has changed. I think from 96 when I started, I said I only want to send in check and I could do it at a premium, which means the market has changed. I would like to go a little bit to the sector as a whole. In diamonds, it started from top. Because of the control of the supplier, they say, only if you do this best business practices, we will be allowing you. I think we all mentioned Kinchal. I'll also mention him. He was first on the advisory side, helping these people get up and then do it. So everywhere we find there is some sort of a awareness. Gem and Jewelry itself did a very good thing by creating a KYC bank. Otherwise what Abid said, when you ask somebody your detail, he said, no, kyun dena? But it does not absolve you of the responsibility. But there is some way, ऐसे आपने ये दिया मेरे को ये check करना है. Sir sitting next to me, I cannot say that I'm out if I've taken this paper. No way. But yes, there is already been awareness created. Okay, I'm creating a KYC bank, I'm getting it, you're giving it, I'm just rechecking it. So the awareness was created, we have to do it fine. The problem with the industry is whenever you put a regulator, there is a past, some sort of a stress saying that regulator only comes if there is a problem. So a normal interaction or reporting to a regulator, they feel there is a problem. I'm very happy that at least the government taken an initiative here. The reporting entity for most of the small player can be an association. And I don't mind, this industry does not mind talking to the association. And that can report further down. So that way we have worked out. Yes, the education is an ongoing thing. We will have to teach a lot of these people how it will go. I don't see there should be a concern कि ये नहीं करना है. Now it is very, very clear that it has to be done. Up to what level and how we check it is done. Let me share. In past also when used to, people whom I know for 30 years or 40 years who have survived were following this process knowingly, unknowingly, systematically or unsystematically. They used to tell me, don't deal with that fellow. वो चोरी का माल भी deal करता है. But means there was some sort of a KYC, there was some sort of understanding, but it was more dependent on his personal knowledge. Now it has to be systematically done, and to satisfy a regulator and the system for long, it should be demonstrated it is done. So yes, industry would be worried that if I'm caught on something wrong, what will happen? And the inspection in India many times comes after a very long time. And maybe sometimes there is a feeling, I don't know whether it's correct or not, case regulator wants, if they even know something is wrong, बकरा जरा बड़ा होना दे, बाद में हलाल करते हैं. But I think that's not the thing here. So that is a uncalled for concern. The trade has to come up saying, we will keep on doing it. All the associations, everyone have been doing regular seminars and hoping for compliance. And maybe through the sessions like this or organizations like this, we may be able to do it better. And we have to do it not for any other thing. We would be brand India, which is the best.
Sir, you've brought in a very important and a very valid point in the context of, let me say, awareness and training. And that's precisely where I'd like to ask how UAE actually dealt with this, particularly in ensuring that the last person, last entity is aware as to what the compliance standards are. Picking up from what Sudesh said, cost of compliance, how much ever we may want to stay away from it, we keep coming back to it, and trying to juxtapose that with what Mr. Singh was saying in the context of FATF being a very technical subject to start with. One, it's technical. Two, there's an enforcement, a regulator angle to it. But three, there is a knowledge deficit combined with a trust deficit. So how did UAE deal with this training, awareness, and ensuring that there is less of enforcement and more of self-regulation where entities come forward to make sure they are aligned with the compliance requirements?
Yeah, it's not an easy job. Yes, we have had multiple outreaches. We do use different ways, different means. So we do. Initially, we didn't have the capacity, so we were using external consultants and everything. But one thing, as a regulator, we made sure was the information was available for free. So all the trainings that Ministry of conducted was free of cost, either in person or a virtual training. So we help the industry to have the minimum understanding. From there, how they further develop it was up to them. And yeah, there are various organizations who charge a fee and do this consultations. And the industry was very, cooperative, or they help the process. So there are organizations like GJPC, the equivalents in UAE. They came up. They also took a little bit of burden, and DMCC, for instance, had a role to play because they are the ones who have the closest interaction with the industry when it comes to the diamond industry and gold industry. So yeah, we made ourselves available. That's another thing. So I have never told no to any of the industry participant, any of the organizations, any of the members to reach out to have an interaction. And whenever, when the IGPC invite came, I asked my line manager. So she told one thing: yeah, if there is even one person who is going to know something relating to the AML CFT matter, which might help UAE, you go. Rest will take care. So that was the kind of approach that we had. So how much ever we can talk to the industry, we were open to it. And yeah, we kept the doors open. So that is how we made this possible in the short run.
Sir, if I may take this forward and ask, how much do you think Government of India, my understanding, please correct me if I'm wrong, has still not invested in awareness, training, hand-holding, by whatever name one wants to call it, as far as the reporting entities, mutual evaluation, FATF is concerned. How much do you think Government of India should, in a proactive manner, engage with the industry associations, reporting entities? One. And a slightly different question: what do you think, the very interesting point that came from the Ministry of Economy, he said, my doors were always open. So what do you think the Government of India should actually do to overcome the immense trust deficit between this particular industry and the regulators? So these are two separate questions.
Actually, my observations are that even the FATF standard as such requires that the government, through regulator, should outreach and really communicate what is the obligations and what is about the risk. So this is one of the key parameters in IO3, that is for regulator, and IO4 for the entity. And even immediate outcome one, which is the national risk assessment, sector risk assessment, and entity risk assessment, it require participation of all the stakeholders and coming to the conclusion after deliberations. I agree with you that unfortunately, last 3 years when the due to the COVID, the initiative which was supposed to be taken at that time, because I was in the government at that time, uh, we had planned actually to meet the industry and meet all the stakeholders, really to understand what is all about, and but that could not be done at that time. But now, since ME is will be over, and we have to really bring the effectiveness standards, so there is no option except to sensitize what are the standards, how to do it. There are three actually important components of this work. One is the policy side. So policy side, that the government will definitely bring their own amendments, because I don't think that they will be fully compliant even now. So they have to bring their own amendments. Second is the guidance that the government has to issue, that how to really achieve, say for example, if somebody asks me, what is the MLTF risk? So somebody should guide what is the MLTF risk which we are talking about. So the guidance has to be issued. Understanding of the say obligations of a reporting entity. What are the obligations? So there should be a guidance, because if there is no guidance, then understanding the law and applying a law, there has to be, many times there can be a fault, because ultimately it is the law. Third point is about the risk part. So there has to be three levels of risk assessments. One is the national level, sectoral level, and third is the entity level. It is the regulator which has to conduct the risk assessment document of his own sector, and it has to be aligned with the national risk assessment. So accordingly, the regulator is supposed to guide the entity also, okay, these are your risk. And so now, this being your risk, now you frame your policy in such a manner that risk is addressed. Means your objective is that where the suspicion is there of money laundering and terrorist financing, it must be reported to the financial intelligence unit. And where it is not a risk, don't overburden yourself and follow the simplified approach. So it provides you two approaches. One is simplified, one is the you can say enhanced due diligence approach, where high risk is there. So these all documentation, understanding has to be in close partnership with the policymakers, regulators, regulating entity, and there's no escape route on that. And law enforcement also, because ultimately, like for example, enforcement directorate is investigating some cases, say for example, money laundering relating to say smuggling of gold. Take an example, and it is a cross-border issue, how the money actually gold is being routed, how the money is being actually settled, who are the big players, what are their vulnerabilities are to be settled. So these are no industry will be knowing. If for example, if I am in the industry, how I will know? Because these are the matters sorry, these are the matters which really comes through the investigation side. So all these partners have to come together, they have to really understand, and then they have to implement it. So it is a partnership business. No single entity in isolation actually can handle this. So this is my observation. Now coming to the other part of this question, when I was, as I told, I was there as a co-chair for 8 years. At that time, every 3 months reporting was there of the monitored countries, and we used to ensure that they have to really tell us how many actually on you can say awareness sessions they have done, which people, for how many days, what are the course content. So that, because ultimately it is not a knowledge which is there in the books, it is more of an experience sharing, and it comes from the global standards. So sharing of the information to the stakeholders is the first starting point for this work. Thank you.
So thank you so much. Now I have a slightly connected question. We've been talking about knowledge deficit, trust deficit, how to bridge it from the government sector. But I've always wondered in the context of AML, particularly now all the more because of the amplified FATF related issues. What about the perception management from within? Because this industry is one industry, sir. You'll appreciate you've dealt with them for more than 3 decades, I presume. How does the industry think it has to deal with the perception vis-a-vis the regulator, and how much of this perception management do you think is going to help in the mutual evaluation process? One, to Vaidya sir, and finally, my last question is: do you think the time has now come, or do you think, personally speaking, the industry is largely ready for self-regulation? If not, why? If yes, what's the reason?
I think at present, if you take gem and jewelry industry as a whole, they have internally started to accept that we have to be regulated, a very good self-regulation, and the systems are being placed. It helps for their growth. Now, if you break up the organized diamond industry, it is very much in place. Yes, there would be some training required to upgrade themselves because you cannot be complacent. The organized jewelers, they are ready and they do it in a systematic way. They have to be trained to do it large. I will just say one thing in favor of the Indian government is what can be done in UAE. I'm not belittling what you did. It's a small. It's much easier than to do it across India. And there, if they start with one segment or one area, it may be looked up. This is not proper. So yes, it will take time because when you're looking to India, you're like handling entire Europe and a population much larger than that. So that will take time. And as in morning in the first lecture we heard from the revenue secretary that everywhere there is a jewelry shop. So every village, that ground level training will take some time, and we may have to give it some time to be on board. Not because they don't want to be. The importance has to be explained, and they will take it very well. And we have to remember that they have been the most trustworthy financial friends, guide, philosopher, and even bankers for that region. That's the role friend, guide, and philosopher a jeweler used to play in part. And indirectly, that sector always did their own KYC and not entertain some type of people. Now they have to do it in a very, very, very proper way. I think we cannot just say SRO, SRO. We have enough regulations now. If you comply by it, we don't even need any outside certification, but you have to comply to it by letter and spirit. Then I am not worried about Ajay Singh not getting more fees. His highest fee earning thing is perhaps from India. I don't know whether you can confirm that. Thanks for confirming. So, you know that we have been paying cost in doing it, though we have been told not to use this word. We will definitely do it, and in a systematic way, we'll go. Yes, but education has to be a little bit more, and all of us who claim to be knowing the trade or being part of any organization, they have to bring it down. There would be some gaps. We will take maybe 1 or 1.5 years to be on board. The way, some time back they used to say that hallmarking will never happen in India. What is it? If you see in 92 or 91, 80 or 90% of gold was smuggled into India. Within 4 years, 95% was through proper channel. Silver. So that, if you see the other part, it is we have grown. We have to just give it the right importance and little bit of knowledge, it will grow. And I'm sure little bit of push on the government side, on industry side, and customers' demand will bring it into a proper compliance.
Wonderful concluding remarks. I would want to close this, provided there are no questions. Yeah, sure.
So, got direct one. I think this was not answered here. Considering that we are under the review now, what is the probability that precious metal sector would contribute to the highest risk of India potentially being moved into the monitoring list?
That's a very controversial question. I'll leave it to the panel.
But I'll give it to Bhargav sir, because he knows how the industry has progressed and where does he see. That's one, and that's a related question.
Let him answer first.
Yeah.
Yeah, please.
Actually, the question is based on the perception part, but let me remind all our colleagues here that globally, if you see the compliance of the immediate outcome 4, where the DNFBB sector comes and gold dealers are a part of that. Globally, the compliance of IO4 has been very poor globally, because this is basically a industry where you are bringing the AML CFT program. So FATF also noted that in case of a banking sector, it is being regulated from last 30 years. So it has developed a very good culture. Documentation, understanding, compliance, coordination, global level. But this area, DNFBB sector, is scattered one. It was mainly looking for from the technical side. They want that, okay, there should be a registration. Okay, there should be some due diligence. Okay, some STR information to the FIU. But when the effectiveness standards came, it was a big challenging task for at the global level. So in that context, if we see India will also fairly the same level as other countries are faring. But only disadvantage which I perceive is if there is an action plan tomorrow by FATF, say you have to do this in next 1 year or 2 years, 3 years, this sector should not become focus of that. Then it will become very challenging. Because if you see in the fifth, if really want to meet the gaps in next 3, 4, 5 years, then it's not challenging part. Problem will be when time limit is given 1 year or 2 years, then it will be a difficult for the country. So we will leave this answer open. Let us wait for how the actually MER comes, right? Thank you.
I just want to add one sentence. Sudesh, I should thank you. Such a knowledgeable person about Indian market, regulation and the act. Out of DNPB and the words we use colloquially, diamonds, precious stones, jewelers, you did not mention. You only mentioned about precious metals. So I think other sectors you're clear.
You had a follow-up.
Yeah, follow. So there again, when you talked about effectiveness, this is where the conviction rates. So to look at the conviction rates, it's been
Equally controversial,
Yes.
this question.
So that's again a point that's always brought in the review, and I don't see we have progress anywhere in last 2 years on that front either. Although one good part is that at least on the smuggling side there's been quite an increase, I suppose.
I think if I have to very genuinely answer your question as an advocate, that is going to happen only if we go for overall judicial reforms. And that is something that's not in the cards now. And the bureaucracy does not have any role, minor or major, to play as far as, conviction rates are concerned, or even prosecution is concerned, because it's completely in the domain of the judiciary. And with increasing smuggling, which one would again want to squarely connect to the policy in that domain. So this is like different arms of the government working together, and it's a complex issue. If I can give a non-controversial answer to your
I think the
controversial
conviction comes later, but how about the reporting rate?
Sir, I'm Premnath here from FinMed. Two questions. One is that, the reporting entities for the precious metal dealers segment for the PMLA, provisions. There are very few who have actually registered with as a reporting entities. So the condition which has been given is that they should have more than 10 lakhs or more than 10 lakhs of cash transaction during a month or so. So, but at the same time, there are some barter transactions of jewelers, where what happens is some client comes, he gives maybe around 8-9 lakh worth of jewelry, and he purchases about say 10 lakhs worth of the fresh jewelry. So in that case, whether barter is also to be treated as a cash transaction or what? Because there is some confusion in this regard.
Dekho, I will answer your question in two ways. One is the standard what we are talking about. Actually, it is only for a technical compliance. Means we are supposed to actually, in terms of law, we are supposed to do this. But the way you have put the question, it is basically the evasion of the policy. Because if go by the intent is, what is the intent? Intent is when I am doing a business with a person who is coming with cash of 10 lakhs rupees. For example, it 10 lakhs is not a small amount, so it may involve the proceed of crime. It means it must be some illicit kind of a money. And if the person is bringing that kind of a money, I have a duty to do some due diligence. Ki who are you? What you are doing? What are your sources of funds? And if I found, okay, these funds are really look to be suspicious, then I must really generate an STR, suspicious transaction report, and write to FI. That is the spirit behind it, right? So when you really apply as a reporting entity the FATF provisions, never overlook the risk part. Always filter through your question and answers in terms of the risk. Because tomorrow, why actually this FATF standards preventive measure is there? It is benefit for the entity also. I can answer you the other way. For example, a person tomorrow is caught in say some corruption cases, and there is a money laundering case. Then and gold is recovered, and it is proved that okay, this he has bought from your agency. Now there are two questions will be there. You will be called as a witness. Second, if any of you are a reporting entity and it is noticed that you overlooked, you didn't have any KYC, CD, nothing you have done, it means there will be chances of being a party to it. So it is always a good for the businessman today, once one becomes a reporting entity, to do due diligence from the risk point of view, never look from the pure technical point of view, because there are 100 of ways a policy can be, you can say, violated in collusion with other party. So that is the spirit behind it. And second point, don't take it as that is coming as a burden to me. No, it is protecting you from the problem which are going to come tomorrow. So that is this.
Yeah, thank you so much. In fact, here the training program is very much required to sensitize these people, because otherwise people think that, more than 10 lakhs, they are not doing anything, so they are not going for the registration of reporting entity.
I'll add just one thing to what Yogbal sir have said. He answered it, but to give you a practical version to that. The example you have quoted, someone have brought in 9 lakhs worth of jewelry and purchased 10 lakh worth of jewelry. So if you look, sir have explained it. If you look at the risk perspective, what is the risk in that? So the 9 lakh which belongs to him is in the dealer's case. If suppose I'm the dealer, in my case, there is no money laundering exposure there. It might be his ancestral, it might be he bought it from somewhere. So the money laundering exposure that I have, the risk element is just that 1 lakh. So if 1 lakh is technically in the cap of whether you need to report it or not, that is what you have to look. I'm just telling the same thing what sir said, but on a practical point of view. So it is based on risk. You have to understand how to assess that risk that you are facing. That's the crux of the matter.
I think you said it very nicely, but what he has to be sure that 9 lakh jewelry, he is sure. But I would request sir also, if I see if it is correct, whenever in doubt, it is better to report.
Yeah.
And sir, person like you, I think will depend that you will do a lot of training and your organization, maybe it costs or something. I think I've troubled your group as a lot on it. And the thing is that I would like to bring it, just one sec I'll say, that even if that jeweler says no to that deal, it is still a reporting entity, because that transaction you don't fit for, correct, I should not do it, but I should still report it because it's my duty and liability that has to be understood.
Now coming to the other part of the question which I didn't deal, but I can tell you that in coming years you will have the team from the regulator side, right? They will see your books of accounts, and if they come to know okay, you are doing it, and if they come to the conclusion ki, okay, you have not complied, then initially they may be very good to you. They may say okay, these are the remedial measures, you finish it and give the compliance. Tomorrow they may start imposing sanctions also, right? So this is not the actually end of the game, because there are three things which are under continuous matters were moving around the reporting entity. One is the from FIU side, right? If some transactions are reported from somewhere, and if they conduct an audit on your say reporting entity, they have full powers, they can get it done. Second thing is the regulator side. They can also, they have the full powers to come and inspect and find out the non-compliant kind of situations and take actions. And third is through the law enforcement side if some problem is coming. So you see, you have to really understand that once you become a reporting entity, what kind of situations you are there. So better is to comply the law in true spirit, protect yourself, give the declaration and remain happy.
I want to very sincerely thank the panelists. We've absolutely run out of time. So this discussion will continue offline over lunch. The panelists are here. I'm sorry if there are more questions. I can see some hands. I thank IGPC very sincerely and also want to thank all the panelists here and all of you present here for your questions, for your insights. And now it's over to Anumeha.